So we do have another question that just came in, and someone wants to know, is it better to take a salary or distributions from my S Corp?
Is it too trite to say it depends?
I was gonna say that too, it depends.
Yeah, so if you have an S corporation and you take money out, then the first money out is required to be reasonable compensation for your services. So there's a lot of problems with this issue. So nobody knows what reasonable compensation means because it's not defined anywhere. It's just like reasonable for your services. What are you doing? And then there's a lot of constraining factors that goes into that. So one is that the company has to have enough money to pay it. So you are not supposed to anyway. You're not supposed to create a net loss by taking a salary from an S corp. But a lot of people hear the reasonable compensation part, they don't hear all the other parts. We had one client who came to us, and in a couple of years ago, they took salaries of like $250,000, and they created a loss of 265,000, which is just insane because you're paying payroll tax and all that. You're going against guidance actually to when you do that. So it's got to be reasonable. It's got to be affordable by the company, and it applies to first money out. And you want to think about the salary portion determines what I can contribute to retirement plans, so like 401k or similar. So there's that factor. There's the QBI optimization as far as how much salary do we want to take out. And then if you look at the court history of reasonable compensation, because this whole thing is an issue because of two things. So one is that you're paying Social Security and Medicare on your salary. So that's 15.3% extra. And you're not getting the QBI deduction on your salary. So that's a potentially 20%. So it's a 35% delta between profits, distributions, and salary. So there's a huge incentive to do more distributions than there is to do salary. That's why the reasonable compensation rule exists, because they still want to make sure that you are paying into Social Security. Yeah, but you have to weigh all these balancing factors. And what is reasonable for you is probably not what you think it is. Because let's go back to the air conditioning tech. So if I hired an air conditioning tech full time, it would cost me a certain amount, depending on where I live, depending on how big a business I have, depending on what level of expertise that particular person has. And so let's just say that's, I don't know, pick a number, $50,000 a year. If you are a solo operation and you are being an AC technician, do you pay yourself $50,000 a year? And the answer is probably not. And the reason is because you are not solely doing that one job. Any business owner is doing 16 different jobs. And, what there are multiple approaches for how to calculate all these things. One of them is to actually take a journal and just log your hours over the course of a week or two or three and say, okay, I spent 6 hours doing marketing. I spent 2 hours doing sales. I spent another 5 hours trying to chase down people to actually pay their bills. I spent 3 hours doing email, and all these different things all have different associated hourly rates with them. So if you were to go out and replace yourself with somebody out in the market for that job, and it's all going to depend on your industry, it's going to depend on your location, it's going to depend on the size of your business. And there are tools for calculating all these things. So one I've used fairly often is RC reports. And they'll charge you, I don't know, I think it's $500 to calculate this report. And you can do that if you want, or you can do your own research on salary.com and things like that and try to figure out whatever is reasonable. But you come out with some blended average as far as a rate. So if paying yourself as an AC technician is $30 an hour, when all is said and done, you might be at like 22.18 an hour or something like that. It's usually going to be less than the pure job function that you think you're doing. And so that is another constraining factor on how much you want to give yourself for salary versus distributions. So all of that is to say that are heavily advantaged tax-wise, which is why they're trying to force you into paying yourself some payroll. Oh, I started to talk about the court history. So when these things go to audit, which is rare, especially with all the layoffs in the IRS, it's going to be even rarer when they go to court, the court asks the IRS what should this person have paid themselves in salary. Almost always they come back with whatever the max that year for Social Security was, because that's what this is about. Just know that. So if you have a lot of net profit, you want to be looking at, say, am I in the ballpark of paying a lot of Social Security tax?